Have you ever wondered how people build wealth through the stock market? Why do stock prices rise and fall every single day? And how do investors make money from companies they don't even work for? In this video, we'll break down exactly how the U.S. stock market works in simple terms. By the end, you'll understand what stocks are, why prices move, and how beginners can start learning about investing. The stock market is a place where investors buy and sell shares of publicly traded companies. When you buy a stock, you're purchasing a small ownership stake in that company. That means if the company grows and becomes more valuable, your investment may grow too. Major U.S. stock exchanges include the New York Stock Exchange and NASDAQ. These exchanges connect millions of buyers and sellers every day. Companies sell stock to raise money. Instead of borrowing from banks, businesses can offer shares to the public through an initial public offering, or IPO. This gives companies capital to expand, hire employees, build products, and grow their operations. In return, investors get partial ownership. Stock prices move based on supply and demand. If more people want to buy a stock than sell it, the price rises. If more people want to sell than buy, the price falls. But what influences this? Several major factors. Company earnings. Strong profits often push stock prices higher. Economic data, inflation, jobs reports, and GDP affect the market. Interest rates, Federal Reserve decisions can move markets significantly. News and sentiment, headlines and investor emotions impact prices daily. Global events, wars, pandemics, and political events affect markets. Investors often track the market using indexes. S&P 500 tracks 500 large U.S. companies. Dow Jones Industrial Average tracks 30 major blue-chip companies. NASDAQ Composite includes many technology-focused companies. These indexes help measure overall market performance. There are two main ways investors make money. Capital appreciation, when a stock's price increases after purchase, and dividends, payments companies distribute to shareholders. Long-term investors often use both strategies to build wealth over time. The stock market has risks. Prices can fall unexpectedly. Companies can fail. Economic recessions can hurt investments. And emotional investing often leads to poor decisions. That's why successful investors focus on research, patience, and long-term thinking. The U.S. stock market has helped create wealth for millions of investors around the world. But success comes from understanding how it works before investing. Learn the basics, stay patient, and always think long-term. If you enjoyed this video, like, subscribe, and comment below what investing topic you want next. Thanks for watching.